All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everybody? How you guys doing?
Man, oh man, if you felt a little bit of relief today, man, I feel like we've been getting hammered for the past 3 days. It's just the market just been hammering everybody. And honestly, if you guys look at the overall market, we didn't really go anywhere. We're still kind of like lollygagging around the same levels. We didn't really go too far. But apart from that, man, let's look at some of the numbers. Let's look at S&P 500. I mean, we were up pretty nice before the market opened, and after the market opened, then we dropped back down. I think we open at like 740, 741 or something around there. We end up closing at 707.98. The Dow Jones was also up 119.65 points, which is 22% to finish at 53,463 and 5 cents. The Nasdaq was also up about 16%. The small cap kind of move a little bit today. You should look at the small cap, and then we're up about almost 0.5% today. So 0.50% today. But overall, I don't see us going anywhere. I mean, the market kind of had been like not really doing a lot today. If you look at past 3 days, we haven't really gone anywhere. If you look at it, we haven't really got too far. Every move that we kind of do is it kind of got smacked a little bit. I mean, if you look at all the charts from all the index today, I mean, we open up pretty nice, and then we just either hit the previous day high or something like that, and we just like kind of got rejected there. So again, the market is still kind of analyzing a bunch of stuff. So there's a lot of catalysts. There's a lot of things that the market's kind of trying to weigh on. But before we talk about that, man, Wale, what is your thoughts about this past couple of days, man? I mean, I haven't really been able to find a good trade except for Moderna. I mean, I didn't trade Moderna, but we talk a little bit Moderna in a little bit. But yeah, let's talk a little bit about this week, man.
Yeah, I'll be honest with you. The volume on most days has been very low. Hasn't been a lot of real market movement outside of the pre-market moves.
Yeah.
When we look at what's happening in the intradays, there hasn't really been much going on. I'm looking at SPY and I'm looking at the last four trading days. We have closed lower than we have opened on
Mm-hmm.
SPY. I'm looking at QQQ. QQQ has closed lower than it opened for the last four trading days. And IWM has also closed lower than it opened over the last three trading days. So if we look at the moves over the last, I mean, let's just go back to August 4th. Market hasn't really gone anywhere. Um, IWM has kind of been stuck in a range. Uh, even though SPY made a new high on 813. It has been steadily been dropping since then. So yeah, from a technical standpoint, it hasn't market hasn't really been doing anything. I know people say seasonality. August is a low volume month. So maybe
Mm-hmm.
that's the reason why. There's no Fed meeting this month as well. So maybe the market is just digesting data and all of that stuff. But I did see yesterday that there was a lot of selling of AI stocks and buying of software. So I saw that phenomenon again yesterday. Kind of saw some of that today, like ServiceNow was up pretty substantially today, was up 6.45%. Adobe was up 3.5%. Adobe has been a stock that I thought was dead in the water, but ever since it hit a low of 190, it's now trading at 263, no, 272, and has finally crossed the simple 200-day moving average for the first time
Ooh,
since, I mean, let's go back. I'm going back a year and I got to go back even further.
that might be a good one to start looking at.
Yeah, it crossed the 200-day moving average for the first time since December of 2024. So that
Mm,
stock has made a pretty decent recovery. Not one that I particularly personally believe in. Like I said, I thought this one was dead in the water, but it's been people have been buying it since 190 and it has
yep.
pushed higher since then. So that might be one that people might want to take a look at if they believe that the business can turn around. But yeah, I mean,
Yeah. But they're sitting at a very critical level too. If you look at that same level got rejected back in June 2026. So we'll see. if it
Yeah.
can get past that.
Yeah, I'm not a believer yet. If it gets above 285, maybe I'm a believer. But yeah, I think that's been a stock in my opinion. I just thought it was dead in the water. So
Yeah, it looks like they're making a comeback. But man, let's talk about this, man. I mean, Adobe's crossing a good number also, but we are also looking at the US crossing another crazy number. I mean, according to Treasury data, we are at $40 trillion in debt. That is a wild number. Imagine this for me. If you have $40 trillion, you can circle the moon end to end 571,455 times. That's how much $40 trillion can be wrapped around the moon. That's crazy, man. Like, I mean, like what are we doing? Like, where are we going with this? You know what I mean? Like, it's just crazy. Just in January of 2022, I think we were sitting at $30 trillion. So it took us what 4 or 5 years 4 years to get to another 10 trillion. I mean, are we gonna take another 2 years to get to 10 trillion? That's a lot. That's crazy debt growing in less than 4 years. Like that's a lot, you know? So let's talk a little bit about that, man.
I will say this has gotten to a level where I am honestly very concerned about what how do you manage this? Because once you get to 40 trillion and you continue to run a deficit, so understand that the US continues to spend more than it brings in every single month. And as you issue that debt costs you money to service because you got to pay interest.
Yep.
So here's some staggering information. I mean, the interest expense on the debt is a little bit more than $3 billion a day, which was $90 billion a month just in the first 10 months of fiscal year 2026. Now they're saying that the annual cost to service this debt is roughly $1.5 trillion. So you're shelling out $1.5 trillion a year in just interest. We have a 30-year treasury that's hit highs we haven't seen since 2007. We have a 10-year treasury that's hitting new highs as well. So the cost of issuing debt just continues to go up. And
Crazy.
this is not a, I mean, this is, it doesn't matter who's in office at this point. This is not a one side is better at managing money. No,
This is just
there is massive fiscal irresponsibility in the United States government. And it's gotten to a point where it's getting out of hand. And surprisingly, and I've been calling for this for quite some time. I don't know. I'm assuming that a downgrade in the financial rating of U.S. bonds has to happen
yeah.
because the debt to income ratio, the interest payments, and the speed at which the debt is increasing.
It's
I mean,
wild.
there has to be a downgrade. Standard and Poor's or Fitch, whoever is rating the U.S. debt, there has to be a downgrade coming.
Yep.
And to me, it's gotten to a point where there's really no plan to even try and manage and curb what is going on. If anything, they're trying to cut taxes. People were saying that tariff revenue was going to offset, the cutting of taxes to bring in more revenue. That doesn't seem to be doing anything. Yeah, this is something that's just it's just wild. Like this is
Yep.
crazy.
Yep. Yep.
And I think they said that every president since 1960 has added to the national deficit, some more than others.
Hmm.
But I think let me give you some data that I saw online, and this is crazy. So it's looking at presidents and how much debt they have issued They have increased the last 5 presidents. So Bush, Obama, Trump, Biden, and Trump have added, I mean, let me start with Bush. Bush added more than $4 trillion to the deficit. Obama added more than 9 trillion to the deficit. Trump's first term, he added more than 7 trillion to the deficit. Biden added over 8 trillion to the deficit. And so far in Trump's second term, he's added 4 trillion to the deficit. Clinton added a little bit over 1 trillion, but it started with Bush in 2000.
Yeah,
And
that's a huge spike.
that was a huge spike. And from there, it's just been a straight line up.
Yeah. I guess because of the
So
war and all that stuff during that time too.
correct. Yeah.
Yeah.
So, I mean, and then Biden, Trump, not Trump, Obama inherited the financial crisis.
Financial
So,
crisis and another war. So it's like another, that's, yeah.
correct. So all of this printing of money, at the end of the day, the biggest losers are US consumers because the value of what you own today will continue to drop as inflation continues to go up. I saw somebody that said if you made $60,000 in the year 2000, I don't know if he said the year 2000 or year 2008. If you made $60,000 back then, right, you would need to make $115,000 today to have the same
The
purchasing
same
power,
lifestyle. That's crazy.
which is crazy. And like I said, I have seen, you're in Atlanta, I'm in the Bay Area. We've all seen how ridiculous cost of
Yep.
living has gone up.
Yep.
We've seen how just basic needs, stamps have almost quadrupled since COVID.
Yep.
So, this is one of the biggest reasons why you need to invest because unless your job is consistently giving you pay increases that keep up with CPI on a regular basis,
Good luck.
good luck. Yeah.
Good
So
luck.
this is why you need to invest in the markets long term because that is going to be one of the ways that you can curb, you know, the disaster of what is going on with purchasing power over the last couple of
Yeah.
years. And like I said, no one in Washington cares where this debt is going. No one cares.
They're all
No,
making money.
no one cares. So
Yeah. Yeah.
yeah,
But that's crazy, man. Like you said, like the cost to service this debt is just crazy. You know what I mean? And the more debts we acquire, it just means there's like all the government revenues that we get, it just go toward interest. Like they gotta pay those down. Like they gotta pay that, you know. So it's like so that's gonna go into even like your local government and all that stuff. Like you're gonna start noticing some of those things actually, your local budget is probably gonna be, not as much anymore. So again, this is not just big numbers that's impacting like let's say the rich people, but it's actually like impacting everybody,
yeah.
you
It's
know?
it's a huge black hole. And the crazy thing to me is I don't know when the time bomb is going to explode
Mm,
because there's
mm-hmm.
a lot of economists, especially people who are on the academic side when they look at, economics in general. This is something that's not sustainable. It's also something that stocks should not be going up in this type of environment.
Absolutely not.
So,
Absolutely not.
so when you see stocks continuing to go up, when you continue to see these types of numbers from fiscal irresponsibility, that's why a lot of people keep saying there's a bubble, there's a bubble, there's a bubble. There's like the house of cards is going to fall. Everybody keeps saying that, but I guess the question is when? When is it
Yeah.
going to happen? And I don't think anybody knows. But this is to me, this is absolutely crazy. $40
It's
trillion
ridiculous.
dollars, and it says we probably get to 41 before the end of the year.
Yeah. The speed of how much we add in debt is ridiculous.
It's
It's ridiculous.
ridiculous. It's
So
ridiculous. Yeah.
I hope you guys know what that's, how important this is to keep an eye on and see exactly where we end up. Because um if we default on any of those, oh boy.
If the US defaults on its debt for the first time in 250 years,
The way the stock is gonna drop, the way the stock market is gonna crash is not even funny.
oh
It is
man,
not even funny. I mean,
Yeah.
that will bring like crazy drops in the market, not just in the US, but across the world. So, yeah, it's going to be interesting. Well, that brings it to last week inflation numbers, man. Actually, some good news. I mean, the July headline kind of came at what 3.4% year over year, slightly down from June's 3.5%. So, I mean, not a crazy drop, but it's something, right? So, again, let's talk a little bit about that, man, because I find that interesting that that the number it's staying steady. You know what I mean? It's not really like making any big move and stuff. So is inflation still there? I mean, are we seeing some stabilization? Like what do you think is happening?
Yeah, to me, I will say that the biggest takeaway I will say is that because oil has come down tremendously, that has benefited CPI in general, right?
Mm-hmm.
And the oil markets have been fairly, I would say, orderly. They haven't gotten out of control. So we've kind of gotten to a level where it's kind of, basing. Let me look at the last futures numbers that I looked at. So this is what am I looking? Am I looking at Brent crude or come on? My chart's taking. Okay, so Brent crude oil, right? That is sitting at 91 a barrel currently. And then I'm looking at light sweet crude that's sitting at 84.49. So going back to where we were when the war started, or when we saw the peak of the war, light crude hit a high of 119.48, and then Brent crude had hit a high of 119.40. So they
Mm-hmm.
have come down pretty tremendously, but then when things escalated, we saw another rally. But over the last couple of days, I would say oil has increased, but the increases have not been super substantial. So that has helped
Right.
CPI a lot. But the Fed is still behind on the curve of where they say they want their inflation target to be. They're still way behind on that. And
Mm-hmm.
the fact that they have not done anything to address that, they've held rates steady. They're talking about they want to take a new approach to looking at data. They want to have less meetings about when to make decisions about interest rates. They're just delaying the inevitable in my opinion, at this point. You have to raise rates.
Yep.
Um,
Yep. Yep.
and I get that they don't want to hurt the market. They think that, jobs are steady, all that stuff. To me, if you have a 2% target in the long run for inflation, the only way you're going to get there at this rate is by increasing rates. And they're too scared to do it. So we will see. But I think the good thing from the CPI and PPI data that we can take away is, I guess, the speed at which inflation is increasing has slowed down.
Yep.
That's it.
Yep.
But inflation is still increasing.
Which is, it's it's something that we still got to keep an eye on. Like it's not just like it's not going to disappear, unfortunately. Like I
No.
think it disappears from the news every now and then, right? Like I feel like we had a few months there where like nobody was talking about inflation. Everybody was talking about the war. What's going on with the war? Everybody wasn't talking about inflation. You know what I mean? But that thing is not going anywhere. It's still in the picture, and yeah, we can't really take our eyes off of that. Yeah, we just got to keep an eye on it.
Yeah. So I think that's to me, that's one of the biggest takeaways. Um, you know, it says, some prices fell down in certain areas. I think they say good prices and all that stuff, but for the most part, um, most of the most of the levels of inflation that people were expecting is what we saw. So there were no surprises. So I guess I would take that with a grain of salt. I guess it's a good thing.
Yep, yep, yep. Well, speaking about inflation, I mean, the U.S.-Iran negotiations gonna stall. Like, what does that mean for overall inflation equation that we're talking about? Iran and the U.S. have temporary negotiating framework that have been put in place have expired. There's no indication they're gonna extend it. Iran threatened that's gonna move toward a more offensive military toward everybody, so they not doing any more diplomatic talks with anybody anymore. So what does that mean for us? I mean, Wale going to touch a little bit about it, like oil. If we see oil start going up again, like that's, I mean, we don't. What does that spell for the stock market, basically? You know what I mean? So that's another thing we got to keep an eye on. But overall, if energy start going higher again, I mean, what does that mean for the Fed? Like, I think that's like that kind of changes like the whole narrative for them, right? So you adding another big issue on top of your $40 trillion already in debt. That's one thing. You have your long-term yield. You have your inflation still above your target, right? And then you have this geopolitical and then oil thing. Like, what does that all mean for the market? Because I mean, we thought this thing was gonna end in like a couple of months, right? Like we thought this is like a few weeks thing. We're gonna bomb them and we're gonna take over and it'll be over. Almost a year later, we're still here. We are still here.
No, I
So let's
think
talk a little bit about that.
I think the war started in late March, so it hasn't been quite a year yet.
Yeah, it hasn't been quite a year yet, but I mean, I don't know, man. It doesn't look like we're gonna reach any conclusion soon before the end of the year. So, yeah, let's talk a little bit about that.
So the way I see it is the backdrop from a macro level is not favorable for stocks. That's what the academic person in me would say,
Mm,
because the traffic in the Strait of Hormuz has not returned to where it normally was pre-war, and I
nope.
don't think it will anytime soon. Iran has even said that they're not going to negotiate with the U.S. until Trump is out of office. They're like, we're not even gonna pick up
We
the
don't want to
phone
talk to you anymore. Yeah.
when someone new is in office, and maybe we can talk. So assume that that's the case, because what it sounds like is they have laid out what they want, and if they don't get what they want, they're not going to listen.
Yeah, not done. Yeah.
So it sounds like they're in the driver's seat at this point, and they're prepared for whatever types of initiatives could come from the U.S.
Yeah.
The U.S. has been asking for more money to fund the war. They've been asking for, for more production of, missiles and all that stuff.
Hmm.
So to me, again, the backdrop of what is going on is not a healthy environment for stocks, because I can't remember the last time I've seen stocks make all-time highs in the middle
In
of
the
a
middle of a war.
war that involved directly the United States of America. I
Right.
cannot think of that. You also have interest rates moving at highs that, again, we haven't seen in the last almost 20 years. So when you look at the future, when all of these companies start to do their analysis and you look at the discount cash flow models that they run, you have to use higher interest rates, which discounts the cash flows more. So all of those things to me are just not, they're not good. And you have a Fed that may need to raise interest rates. It makes me a little bit nervous. I've been looking at bond spreads. We are in an area where I would say I would be very, very cautious. I don't necessarily know about pressing the panic button just yet, but at least for right now, the macro environment is not good. Now, if you drop to the micro and you say, okay, let's look at certain sectors and certain companies at an individual level, the earnings are good. I
Yeah.
think that's the key takeaway. And I think a lot of investment banks and analysts are trying to hang their hat on the earnings for stocks are good. What and I will say that that's usually true, because stock prices increase based on future earnings.
Hmm.
None of that has changed. So because of that, people are still bullish. But when you take a look at the macro level of what's going on, if anything in the system starts to shake and break, I don't care what the data shows from a company to company level, everything goes bad. So
Yep. Yep.
private credit hasn't been in the news lately, which I guess is a good thing
For now.
for now. Exactly. But I think that you can't, I mean, if you're a stock investor, I think it's good to be invested in good companies. But I just think you also can't ignore what's happening in the background at a macro level, because
Yep. Yep.
what usually causes stock collapses, it's not, what happens on an individual company basis. It's what happens at the macro level. What is going on in the background? COVID was a macro level type of event. The financial crisis was a macro level type of event,
Mhm.
right? The dot-com boom, that burst was a macro, type of level event. Even though there were individual companies that were contributing to that, I think at an overall level, things just got too frothy.
Too far. Yeah.
So
Yep. Yep.
yeah, we just got to be patient. We don't, like I said, I don't like to make predictions. I just like to look at data. And when I look at the data, you cannot ignore what is going on. And I would not be surprised if we get back to $100 oil before the end of this year. That would not
Yeah.
surprise me at
Yeah.
all.
Especially if the negotiation is not going and
No,
Iran is basically not talking to anybody. Yeah. Like it's gonna take a lot of work now to get them back to the table and all this stuff. And then this has been ongoing. Go here, come back. Yes, we have a deal. We don't have a deal. We're talking to them. We're not talking to them. It's just like at this point, the market don't even know what's happening.
no. And I
So
think that
I,
I was going to say, I
I
think the market's kind of trying to ignore that as well.
yeah, yeah. They just don't know. It's like we don't know what truth, what is lie anymore. It's just like, are you guys talking? Are you guys not talking? What's happening? But let me ask you this then: the Treasury buying, the Treasury bond buying, like, how does that fit into this whole narrative? Because Scott Bessent announced that Treasury will double the size of certain long duration bond buybacks from $2 billion to at least $4 billion per operation, and that is set to begin September 9th and run through early November.
Yeah.
Now, what does that mean for all of those things we just talked about, like when it comes to inflation, when it comes to the stocks and all of that?
So one of the things that they are doing is that they are trying to buy bonds in the open market to help bring rates down.
Mhm.
So let me just give you some things that happened when that was announced. So basically, the Treasury is going to go into the secondary market and they want to buy older, off the run Treasury from investors, right? So if you got Treasuries that are paying certain interest rates, they want to get those off the books. So what happened is that the 10-year fell from 4.68 to 4.65. Not a huge drop, but
Something.
when you're talking about $30 billion or $40 trillion in debt, it does matter. And then the 30-year dropped from 5.27 to 5.20. So they're trying to decrease the interest rates on the long end so that when they do start to issue more debt, because the US is going to have to issue more debt. Like, let's just be honest, they are going to issue debt into perpetuity, right?
Mm-hmm.
So they want to reduce the cost of issuing debt. So by creating demand for those bonds, prices go up, yields come down. So we'll see what kind of dent they can put into it. But to me, it does not solve the long-term problem. It does not.
Nope.
It's putting a temporary band-aid on a shotgun wound.
Yep.
That's all
Yep.
it's doing.
Yep.
You're putting a band-aid on a shotgun wound. So temporarily, can you make some adjustments when it comes to interest rates on the long end? Yes. But in the long run, no. Supply and demand is going to be the real reason that governs how those rates move.
Yep.
And if the market continues to expect higher inflation for longer, rates will continue to go up. So, you know, I uh, I I understand the rationale behind it, but I mean, like I said, it's a very temporary solution, in my opinion.
Yep. Yep. I believe so too. So I don't know what they're planning on doing with that, but we'll see if they can put
Be-
any more dent in it because that's not enough.
because let me also mention something. So you're increasing your buybacks from 2 billion to 4 billion while you're running a deficit. So where's the money going to come from? You got to issue more debt.
And what happened when you issue more debt?
So this is what the US is doing. They're issuing more debt
God,
to buy back debt.
it's a big circle, man. It's
Because
just
again, like, you increase it by $2 billion, right? You're running a deficit. So that goes to your negative profit line. Like, so imagine you're a company, right? You're in the hole $2 billion at the end of the year. You owe $40 trillion in debt, and you're like, you know what? Let's pay down let's buy back some of our debt. But it's not coming from profits. It's not coming from free cash flow. You got to go to a bank to loan you more money.
To get you the money to buy back. So you're accumulating more debt basically, and now you got to spend money paying interest
Oh
on
man.
this debt.
Can we get a FICO score in the United States of America? For
It'll be
anybody in lending and mortgages, my question is, how much house could the US buy with their current debt to income ratio?
Man, I don't know. You probably have to put the whole country in collateral at this point. This is crazy.
Because I
This
think
is crazy.
the government only brings in about $5 trillion, 5.6. I think in 2025 they brought around $5 trillion in revenue
Yeah, that's
against 38, $39 trillion in debt.
yeah, that's wild, man. That
So
is
even if
wild.
you took all of your revenue and
You still can't
allocated to
pay.
debt, you still can't pay it off. It'll
Nope.
take you 10 years.
Well, that's considered not paying interest
That's
on those.
and that's not paying. Yeah. And that's like if you didn't have to pay interest. And that means that you didn't have to pay any other bills. Like if
Yep.
you just wanted to take all of your money and pay down your debt, it would take you more than 10 years to pay it down, assuming that you don't pay anything else. You don't pay Social Security, you don't pay the states, you don't pay Medicare, you don't pay none of that. It would take you 10 years to pay down that debt.
So, guys, what this means is your $4,000, $10,000 in debt is nothing compared to with the US. So don't feel bad about that, you know.
That's crazy. The US credit FICO score got to be in like the 300s. It's got
Yeah.
to be in like the
It's
300s.
probably low. It's probably lower than that. They probably don't even have a score. That's crazy, man. That is wild. That is
How
wild.
people saying it's a house of cards and people saying the bomb is gonna blow up soon. Man, I don't know.
I
The
don't know,
more I
man.
see this, the more I believe it. And
Mm-hmm.
the I kind of just I look back at the whole Doge thing and I just look back and I shake my head and I'm just like, man, what a waste of time.
It was a waste of time, money, and stress. It was too stressful. They all the program they canceled didn't even put a dent
No,
into the US debt. Like, it didn't even put a dent into it.
no.
And yeah, it's a classic case of overpromise and deliver. That's exactly what it was.
That's basically what it is. That's basically
Yep.
what it is.
Yep. So if you ever think about that, just say Doge. That's it. But then there's Moderna, man. Moderna. While everybody's watching the bonds market, Moderna was like, watch this, hold my beer. Moderna was up over 177% on in one day, guys. In one day. And that happened after they announced that positive phase 3 result of their personalized mRNA cancer therapy, Intisimerin, used alongside Merck's blockbuster immunotherapy drug, Keytruda.
Hey, Truda, yeah.
Keytruda. So, if you guys don't know what like the different phases when it comes to like medical world, like I used to work in that world a long time ago. There's like before you can bring any medication into reality, you got to go through phases. Phase 1, nobody cares about because you're doing testing. Phase 2, you might start testing on some living creatures, right? Phase 3 is actually testing it on people. So you actually have like subjects. You have subject that you tested on. You have subjects that you test. You give one subject the medicine. You have the other subjects you give them placebo, and then you monitor the results from there. So if you can pass phase 3, it means that your medicine is this much closer to be approved by the FDA or to be able to be released into the market. So that is a huge news. Now, is that the reason why Moderna is moving? In my opinion, I don't think so. I think a lot of shorts are covering their position, and I think that's why Moderna is moving like crazy in this time. I think a lot of shorts have to cover their position after this move. So, well, hey man, let's talk about this because Wall Street lost their mind today. Go look at some of those option contracts and see how much. If you were to put $1 into one position, bro, I ain't want to tell you what that number is. Wale, man, let's talk about this one.
I don't think I've seen a stock that was not a penny stock or a meme stock move this much in one day. And as Billy said, a lot of this had to do with short cover. it has to be short covering because a stock going parabolic like from 60 to 176 in one day, crazy. I think in the after hours it's kind of come down a little bit, but
Mhm.
the stock almost hit $200 a share. Now
Easy.
let us put this into perspective with when it comes to Moderna, the company. So Moderna, after COVID, was a $497 stock. So it's got a long way to go before it gets to its all-time highs. Um, so COVID ran Moderna like crazy. After COVID, came after COVID, the stock came down to, I mean, dang, the stock,
It
let me
came
go.
down a lot.
I want to say the stock came down to pretty much 25 a share, 24 a share. Now it's sitting at 174. I mean, this to me is wild. So I did some I did some digging and I just looked at some of these options contracts. Listen to this. I think the 80 calls at one point in today's trading session, the 80 calls and the 90 calls. No, the 80 calls were up 944,000%. 944,000%, which basically means that, I mean, let me do the, oh my goodness, 9545.
Let's put $1 in there.
Yeah, so if you had a dollar, your dollar turned it to 954 grand.
That's crazy. That's some life-changing money that
If you put a dollar into those contracts, you made 954,000 grand. I mean, I'm looking at some of these. I'm looking at the contracts on the high end. So the 80 calls were the highest.
Mhm.
Uh, the 85 calls were up 194,000%. I mean,
I mean, even
and
even if you look at the previous close on this contract. So if you look at yesterday was the 18th, right?
mhm.
At 3:20 p.m., the $80 contract was at a dollar. A dollar.
There was, I mean, if you look at before this move, there wasn't really a lot of open interest in volume on any of
Mm-mm,
these.
mm-mm.
So, I mean, I didn't see any suspicious activity yesterday. I mean, I haven't seen any suspicious activity in the last like maybe 2 weeks on Moderna, but I mean, there were some open contracts. I don't know if they were short, because if you can short stocks, you can short option contracts by selling to open.
Right.
So I don't know if those were sales to opens or buys to opens. I don't really know. I never looked at the data, but I mean, if anybody was holding a contract in any of these strikes from, I mean, you know, September 4th expiration, the strike only goes up to 95.
That's crazy. So they didn't even believe in their own stock. God dang it.
I mean, the options contract only went up to 120 at the highest. And the further you go out, the lower the strikes are. I mean, yeah, I think 120 is the highest strike that I see.
That is wild.
So can you imagine? Can you imagine putting $10 on that?
Yeah, and just like, yeah, I don't care. I'll lose it. I don't care.
Oh my goodness.
Uh,
Crazy.
you
Crazy,
will
crazy,
wake up on
crazy,
on the other side of the world today.
crazy. Now, I will say this though. Hope now after phase three. So what happens after phase three? Does
Oh
does does it go to market or what happens?
no, phase three. Then there's another. I believe there's another phase
Okay.
that it needs to go through. Basically, like now the FDA got to approve it, right? So, but you got to think about too, like some of those clinical phases. It's not like a year long. It's like you're talking about like 3-5 years. You know what I mean? So
Mm,
they might have spent like a long time. I would be curious to see how long they spent on this on this phase because it takes a while because you gotta
okay.
you got to get all your studies, that you got to get all your numbers together, and then you got to go and present it basically to your team, and then they got to approve it, right? So it's like it takes a long time for those phases. That's why, like when they released COVID so fast, everybody was like, "Whoa!" Typically, this thing takes it takes a few phases. You know, you got to test it a couple of times, get some good data, and even like once you get
Yeah,
to a certain phase, it takes a couple of more years for you to get the actual
yeah,
data because you got to do it on bigger. You know, the more you get approved, now you got to do it on a bigger population, right? You do it
gotcha.
in control, then you got to do it in a bigger population. But yeah, that's why like when they did that whole COVID vaccine thing, everybody was like, a little concerned about that because that came out like within 6 months, I think, or so a year or something like that. Like we have a vaccine. Like, who did you guys test this on?
Yeah, exactly. So,
Yeah.
but man, like I said, I have never seen anything like this in my life. I have never seen anything like this in my life. But man, if you were anybody that had contracts and you made money, shout out to you, man.
Shout
Shout
out
out
to
to you.
you. Like, I hope you are on the other side of the world enjoying yourself, So yeah.
Make sure you pay Uncle Sam though.
Yeah, yeah. So again, phase 4 is the post-market surveillance, so thousands to millions. So phase 1 is you test it for, I mean, phase the preclinical is only lab and animals, right? So you test it
Okay.
on set animals, and then phase 1 is human safety. So you do about maybe 20 to 100 volunteers. Phase 2, you increase that up to like maybe 100 or more.
Okay.
Phase 3, that's basically what they did right now. They did it to 300 to about 3,000 people.
Okay.
Right. And then now phase 4, they gotta test it on millions. It can't just be 300 anymore. You gotta be more because now you need more data.
Yeah.
That's how you get those. When you watching some of those medication, you got like, oh, this can cause this, it can cause this, it can cause this, because these are actual factual side effect that
Correct.
they have
Yes.
seen, and they have to mention it. So
Yeah. And they got to record it too.
you gotta record it,
Yeah.
and then when you buy it, it's up to you. Like we told you, so you
Yeah.
decide to still take it. So it's
Yeah.
on you. But let's move on to some of the economic calendar, man. Next week we don't really have a lot, except for one that I'm keeping an eye on is the GDP that's coming up on August 26th. So that's something I'm keeping an eye on for Q2 of 2026. And then we had the personal income and PCE inflation metrics for July 2026 that's coming on August 26th. Also, those are probably the two numbers that I'm keeping an eye on that's coming up next week. Other than that, I don't see anything big until maybe like September when we get the JOLTS number and when we get some of the employment numbers and stuff. But I don't see anything crazy coming up toward the end of the week here, end of the month here. Do you have anything else you're watching for?
Nah, that's it. I've just been a very keeping my eye on bond spreads. Um, I don't like what I'm seeing. But the thing with bond spreads is that no one knows when, I guess, the time bomb goes off.
Yep.
Um, I will say this, the speed at which spreads are increasing is not alarming. So one of the things I always go back to is when you look at what happened before COVID and what happened before the financial crisis.
Mhm.
The speed at which spreads were moving or increasing was pretty steep. Right now, we're seeing increases, but it's not something that's been super crazy.
Right.
But when spreads are wide, that just basically tells you that there's a lot of risk priced into the market, lots of uncertainty. Um, and we have not really come down. We've been steadily increasing every single day. So, me personally, I don't like that, but I'm not going to sit here and you know, talk about doom and gloom like Michael Burry has been doing the last couple of weeks.
I
no one,
mean,
no one knows when the top comes. I'll be honest with you. No one knows when the top
nope,
comes.
nope, nope. That's
But
absolutely,
again, as I said before, you got to be aware of what's kind of going on in the background. So, um,
absolutely.
this is not a bad time, in my opinion, to if you have stocks that you have big gains on, raise your stops, right? So if there is a major pullback, you at least lock in some
Lock in
profit.
some profits. Yep.
Also, not a bad time to raise some cash. Keep some cash that you are looking to possibly deploy if things get ugly. Again, no one knows when it's going to happen, But I always feel like when you start to see certain signs in the market, you know, those who are prepared, those who protect profits, right, they're going to
Yep.
be better off in the long run. So,
Yep.
I've raised some stops on some positions that I have. I hope it doesn't get executed, but if it does, you know, and I don't mean sell everything, right?
Right. Right. Right.
Maybe you just sell half of it. Maybe you sell, 80%, 70%. I don't know, whatever that number is to you. It's not a bad idea to do that when you see the type of risk we're seeing in the markets.
Yep.
But
Yep.
you know, that's what I would be doing right now. It's looking at each of my positions and saying, okay, like I bought Intel at $20. Intel's trading at 96. And I'm like, okay, maybe I raise my stop to like 80, right? So if Intel hits 85 or 80, 85-ish,
Mm-hmm.
I sell a chunk of my position. Now, does that mean
Yep.
I sell everything I bought at 20? No, but
No.
I'm locking in some profits.
Yep. Yep.
So
Yep.
that's what I would be doing right now.
Yep.
Just
Yep.
examining your positions and looking at possibly raising some of your stops, especially if you've had a really, really, really long run. So
Absolutely,
yeah.
absolutely. And for me, it's like that's something I do every year. It's like around maybe like the third, fourth quarter. I just started sitting on more cash than I have in the market. That's just me, you know what I mean?
Mm,
Because it's like there's a lot of rebalancing happening.
correct.
Even when I'm doing like trading, I don't like put too much money in there. But as like I'm waiting for, as you can see, like the market's just like been hitting all time high back to back to back. You know what I mean? So again, you just got to figure out what strategy works for you. Now, do not completely exit the market like the Wale was talking about, because you don't know what's going to happen. Don't
Correct.
completely exit the market. Be in the market. Just make
Yeah.
sure your risk to your risk managing is its own point. That's about it.
Correct. I'll say this too, especially when it comes to like long-term investments, like your 401k, your 403b's, your IRAs and stuff like that. That stuff I wouldn't even like.
Yeah.
I If you rebalance on a regular basis, you should be fine.
Yeah.
Right? That's what I would be doing, making sure you rebalance. Now, your brokerage account, that type of stuff, that's where I'd be looking at individual positions and saying, okay,
Absolutely.
let me start taking some profits. But um, for your 401ks and your 403b's, stuff that you're not going to touch for the next 10, 15, 20 years, I would not be overly concerned with
Right.
those at this
Right.
point. I would still be in the market, but making sure that you're rebalancing at least annually so that you don't increase the target at which a sell-off could affect you. So that's what I would be
Absolutely.
doing. Yeah.
Absolutely. Well, guys, that's gonna do it for tonight's episode of the Wall Street Down Now. I mean, we're looking at the market that, on the surface, I feel like everything kind of like looks calm, but when you start peeling some of those layers, you see a lot of pressure building in the system. So something is happening. Debt is rising, yield is reacting, inflation is not gone anywhere. We have the thing with Iran going on, but at the same time, we have like crazy movement in the market that's happening every now and then. Like Moderna happened today. I mean, you start thinking about some of those things, right? So again, it's calm on the surface. Seems like everything is just moving like crazy, but start peeling some of those layers, you kind of start seeing some of the cracks in the system, right? So I think the real question heading into the next session is, are we in the market that's stabilizing, or are you in the market that's moving, waiting for a big move to one direction or the other? So again, we'll keep a close eye on it. But as always, man, we appreciate you guys tuning in as always. Make sure you guys follow us, subscribe, send us messages, and let us know what you guys want to hear from us. With that being said, yeah, have a good night, and we'll talk to you guys